Hi, this is Wendy again. Can you believe we've already made it to lesson 9? Almost finished. Not that I don't love being with you, but my guess is you're really excited to finish this course. Let's take a look at what we've got on our plate for lesson 9. Our topic is a little bit different than what we've touched on before, and it's called financing your venture. Let me offer you a caveat. The information in this class, the information in your text, and the materials you'll be reading do not preclude you're using a professional advisor or a CPA or a tax accountant or other resources to help you guide your business. This is intended to only be a good overview of the things that are available. That being the case, let's take a look. Now I need my glasses so I can see what I'm doing. So let's see what we've got. Lesson objectives, talking about financing sources, the pros and cons, some definitions of these different sources, and looking to see what's best for your business. And that's actually going to be one of your assignments. Let's take a look here. There we go. As you go through it, be sure you read this information and read your text. My guess is you're going to be introduced to some terms you are not familiar with. I want to make sure you comprehend the terms and have a full understanding, not just to pass this course, because it's really going to help you with your business. And by the way, some of you have some amazing ideas for businesses. So let's see what we've got. As you go through this, one of the things I want to really impress on you is the need to understand the terms in your flashcards. What's an angel investor? I was involved with a software company. We had amazing angel investors. What a bank loan is, and they're not easy. What crowdfunding is. That's like Kickstarter or a site like that. Government grants, how they come into play. What lease financing is, and this helps a lot of people get their business off the ground. Merchant cash advance, where the people that are providing with materials and products aid you in starting your business, and what self-funding is. And not to mention stocks, so taking your business public and selling part of your business to others. Supplier credit, and venture capitalists. Oh, this is a unique world. I've been in that world many times. So as you go through this, one of the things I've got to impress on you is that we've got access to materials from the Small Business Administration. This is a federal government website intended to help small business. It's got amazing resources. Please take the time to go through this, especially this last one. Might be quite interesting to you. We've got some of the definitions here. And then as we come down, your assignments are listed here. I'm not going to talk about assignments yet because I want to come in and share the publisher PowerPoints with you. And here we go. So lesson 9. I'm going to do this really quickly because we've got 38 slides covering 2 chapters. I'm going to go very quick. Understanding what a financial statement is. If you are already in business or if you work for a large business in the accounting department, perhaps you'll understand this. But a financial statement, there's several different types, and it's a view of your business. So if you hand your statements to a banker, if you hand your statements to an investor, they will understand how well you're doing in your business. Or maybe they'll understand where you're challenged. Income statement. Income statement is for a period of time, and it shows the money coming into the business. It doesn't talk about the net worth of the money or all of that stuff, just money coming in. And here's an example. This is also in your textbook. You'll be able to see it a lot easier. A cash flow statement actually helps you predict future cash flows. Give you an idea whether your money is seasonal, meaning maybe in Q1 you make less money than you would make in Q2, depending on what your product is. An example of a cash flow statement. Different types of choices for how you deal with your accounting and your finances. There's 2 different types, accrual-based and cash-based. I will tell you, it's my understanding that once you choose one, it is really hard from an IRS perspective to make a change. So you need to research this thoroughly and make sure you start this right. This is where a CPA comes in really handy. A balance sheet. A balance sheet is a snapshot. It's like you click your finger, say, this is where I am right now. And your balance sheet is going to show a lot of things, including all of your assets, your equipment, your materials, your cash in the bank, money people owe you. It will also show you your liabilities or your debts. Who do you owe money to? Your lease expenses, your utility expenses, etc. There's a mathematical formula that will say if you take all of your assets, eliminate all of your liabilities, what's left over is net worth. That's what your business is worth at that one particular point in time. This is often done either on a quarterly or an annual basis. Some businesses do balance sheets on a monthly basis. All depends on your business. Here's an example from your text. So they've got current assets, fixed assets, and there's a difference you'll understand in your text, and you total all your assets together. Then you have liabilities, or those debts that you have incurred. Some of these liabilities are tied to the materials you purchased to sell or make your product. So you've got your current liabilities, which are the short-term liabilities, your long-term liabilities, and the balance becomes your net worth. So assets here equals liabilities plus net worth here. It's a mathematical calculation, works every time. And how do you measure success? A lot of companies look at profit margins. Don't look at success as being revenue only, because you may have a lot of revenue, but the revenue may not be enough to meet your business expenses and may not be enough to earn you the percentage of income that you're looking for. Measuring success. This is the mathematical approach to a return on investment. And your text describes it really, really well. So it lets you evaluate and compare different types of investments you may want to make. Income versus expenses. Something to consider, and that is conducting a break-even analysis. And a break-even analysis is kind of interesting. It considers a couple of things. The break-even point, your variable cost, and your fixed cost. And normally when I explain this, it is best explained this way. Oh, let me get rid of this wonky. Didn't mean to have that in there. So I apologize for that. Guess while I'm recording, there it goes. Okay, I got rid of it. Let's save this now that it's gone. Apologize for that. All right. Break-even analysis. That is looking to see if you take everything in your business and you want to know the point where you start making money or you start making a profit. So let's look at the variables. On the left, in this example, this is the amount of total revenue coming in. On the right, you have variable expenses. Variable expenses are those that change depending on the number of items you are selling or making. And then you've got fixed expenses. Fixed expenses are those things that don't change regardless of how many things you manufacture or how many things you sell. This could be your rent, your utilities, things of that nature. This would be the cost of your merchandise, things like that. At the bottom, we look at the number of units. So imagine you are manufacturing, picture frames. How many picture frames do you have to sell until you actually start making money? In this particular example, they need to sell 2,000 before the revenue coming in absolutely equals the combination of your variable and your fixed expenses. So at this point, your revenue is here, but your profit is 0. The minute you sell unit number 2001, you start making money. Up until here, you're just clearing your expenses. As you exceed that point, that's where the money comes in. That's where you start making a profit, and that's what this shows. So something to consider. The text does a really good job explaining it. Some money management tips. Kind of important, especially for people starting off on their own and with really small businesses. You've got to pay attention to what you're doing. One of the things I have seen in a variety of small businesses I've worked with and around is often the basic premise of asking for money from people who have bought your stuff. In other words, send them your bill. Some people get so busy running their business, they don't stop to deal with that part of it. So you have to be careful with things like that. Watch your inventory. If you say you have stuff in stock and people want to buy it, make sure you have it available. Review your books. Continually look and see how you're doing in your business. And it's not all about revenue. Just keep that in mind. Different billing payment terms, and these are used in your text and described quite well. And the text for this chapter has a case study. A lot of really good information, good examples in that case study. Recommend you to pay attention to it. All right, now financing your business. Now that you know how to demonstrate on paper what your business is worth and you understand the break-even analysis, the point where your business starts making money for your pocket, now let's talk about financing your business, how to get you some money. The art of raising money isn't easy, and I've been involved with several ventures where raising money has been necessary. Not all money is equal. Different things come into play. Your text talks about this really well. How to finance, what debt financing is about. The advantages and the disadvantages. Again, your text does a really good job on this. Equity financing, and this is where you offer somebody a percentage of your business in return for getting money from them. They can come in as investors, as shareholders, all kinds of approaches, but there's good and there's bad in this. Followed by sources of money for a small business. All kinds of ways to go into this, and we're going to talk about these real briefly. If you go to a bank, there's a couple approaches. Remember that site, I'm going to flip back over here, where SBA talked about questions your lender will ask. That's the kind of information that's very important if you find yourself going to a bank. I've heard banks say something basic like, what are you taking out of your lifestyle so you can afford to pay this back in case your business isn't making money initially? Something to consider. What can you give up personally? So different terms involved in your textbook: term loan, line of credit. Then SBA, we talked about that real briefly. Keep in mind, they don't loan you the money. What they do is they go to the lender you choose that's been pre-approved by them and say, hey, if this business goes out of business, we'll make you whole as a bank. They'll take care of it and they cover the loss. Different types of loan programs from the SBA. Other ways to pick up money to start a business. Private firms. Sometimes firms will invest, just trying to see, often if a product is complementary to something they have, they'll invest. Or maybe you know somebody in business that is in the business of investing. There are investors that are licensed by the SBA, but they're all going to want the same kind of thing, not to mention the financial statements we just talked about. There's commercial finance companies. A little harder to get into, but you go for it. Friends and family. This is an interesting approach. It can make the conversation around your Thanksgiving table kind of interesting. How you find investors, you do research. You have a good pitch. Remember the bio you did, and I think it was topic 5, I think. You have to have that. You have to be able to describe your business, what you will do with the money, and things of that nature, and be willing to negotiate. Process of securing lenders. You need a clear understanding of how much money you need, what you need it for, how you're going to pay it back. Most lenders are going to want you to take your income statement and project how you're going to earn additional income with this investment of money that comes into your business. Can you do a projection on your income statement to say, hey, this is where I will be in 6 months if your firm loans me money? You need to be able to do that. That process is called preparing a pro forma. It's Proforma, but most businesses are going to want to see that. Business planning. You have to have a marketing plan. You have to understand what's going on. And know that if you have investors in your business or anybody that owns a portion of it, they're engaged. They're going to be a process. They're going to be involved in dealing with these lenders. Then there's bootstrapping. That is using your own money. You sell what you can sell, and as you make money, you sell a little more. It's a good thing to do. You've got to stay in control of it, but a lot of people start their businesses that way. Start small. use whatever resources you can to start small. If it means you're selling items at the beginning on Etsy or on Amazon or somewhere like that, just to get some revenue coming in. Not a bad approach if you can afford it. Also, this chapter has an amazing case study I'd like you to look at. It's got some really good information on it. Let's talk now about our assignments. There's two. So the first assignment, we're going to go to, going to give you a chance to write an essay. And the essay is asking that you compare and contrast. Don't forget to do that equally, two different funding sources. Remember, it's an essay, opening paragraph, closing paragraph, and your content in the middle. Second part of the assignment then, it comes again from the HP e-learning site, and the topic is on funding. So give yourself time, do the coursework, give yourself time, because you know by now the certificate's not automatic. Give yourself time for it to come back, so you've got it to upload. Overall, you guys are doing really well in the course. I'm really impressed with all of the work I've seen so far. So study hard. This section in particular, make sure you read the textbook. Can't overlook it, can't glance through it. You need to read the text. The material you're going to find in the text will help you, whether you're in business for yourself or with others, whether someone comes to you and wants you to invest in them. The topic of finances is key, so make sure you give yourself time for it. Hope everything goes well this week. If I can help you with anything at all, please don't hesitate to reach out to me. Look forward to your submissions. Thanks again, guys.